basically what FlashHouse has evolved to is really the only, we basically empower agents to offer their own iBuying solution. And, our mission is basically to eventually have every realtor be able to offer an instant offer when they go on an appointment. And so, it's evolved so much from where it turned into this guaranteed sale program to now this agent-led iBuying tool. And, it's starting to just take off. It's pretty crazy.
Let's discover the Cleveland entrepreneurial ecosystem. We are telling the stories of its entrepreneurs and those supporting them. Welcome to the Lay of the Land podcast, where we are exploring what people are building in Cleveland. I am your host, Jeffrey Stern, and today I have the pleasure of speaking with Ryan Young. Ryan is the co-founder and chief strategy officer at FlashHouse, where he is on a mission to create a seamless real estate buying experience, empower realtors, and simplify the stressful process of buying and selling homes. Ryan was born with real estate in his blood as a third generation in the industry. He is also the CEO of the Young Team, named by Real Trends and the Wall Street Journal as one of the top 250 real estate teams in the country, where they have helped thousands of clients buy and sell homes. I really enjoyed learning about the ins and outs of iBuying, the larger real estate industry, and how FlashHouse has differentiated itself in a truly competitive market. Please enjoy my conversation with Ryan Young. So before we get to FlashHouse and the work you're doing today, I would love to start this conversation with your journey through real estate. I know you've kind of had an interesting path, not originally in real estate. So, tell us a little bit about how it is that you got into this space.
Yeah, so I do have a unique path. I actually graduated high school, and during high school, I cooked throughout my entire high school, career, and actually decided to go to culinary school when I turned 18. So if I was going to go to culinary school, I was going to go to the best one, and went to the Culinary Institute of America in Hyde Park, New York. And I aspired to be this world-class chef, and I did it for about 10 years, cooked all over the country, some of the best restaurants in the country. And, it's funny, the restaurant industry is extremely hard on you physically, mentally, emotionally. And I think I was about 26 when all of a sudden I just kind of hit a wall, and I decided I wanted more in life besides just cooking and, work and everything like that. And so I reached out to my folks who were actually realtors in Cleveland and said, Mom, Dad, what do you guys think about me coming back home and getting into business with you? And I had no education to do so. I was never extremely entrepreneurial growing up. I was a chef. And, they said, sure, let's do it. It was 2009. The market was in the dumps. It was just one of those things. It's like, why not? Let's get you back to Cleveland. You probably won't do this for long, but at least it gets you back here. And once it gets you back here, then you can figure out what you really want to do. And so I moved back to Cleveland, and I did work at a restaurant while I started in real estate, but I started working with them, and I fell in love with it. And I fell in love with every angle of helping people and the hustle and the grind. And, I found that I came from a world where you worked 80 hours a week, and, you only got paid to work 40, but you put in your hours in the kitchen. And all of a sudden I came into this other world where there were a lot of part-timers, and there was a lot of people that, were doing this as a hobby. And I saw this major opportunity of you apply kind of a culinary work ethic to an industry where there's no ceiling. And I got a little taste of that, and I couldn't let go. And I just started pushing harder and harder, and we started growing this team. And next thing you know, we've got a team now of 28 people, the Young Team. And, we sell over 600 homes a year. We're top team in Ohio. And it's just amazing to see over the past decade, this culinary guy that all of a sudden got a taste for business and for, building and, all of a sudden became much more entrepreneurial. And so 10 years later, it's just amazing to see kind of to look back and to see what I used to do and to where we are now and what we built with our real estate team, the young team. It's been incredible.
Yeah, can you give us a little bit of an overview of Young Luxury and the Young team and what you've been working on there?
Yeah, so I joined my folks, started building the young team, and over the past decade, we've just kind of kept seeing what I would consider as holes in the market. And one of the things that we're extremely excited about is we started Young Luxury. And Young Luxury, I had a relationship with a very large broker in New York City. And when COVID started, him and his family were kind of getting ready to get out of there. And he grew up in central Ohio, and I started having some conversations with him. And I see Northeast Ohio, we have these beautiful homes and we have, these incredible estates. And I don't think we're marketing them appropriately. I don't think they get the level of attention that you would get in a larger, metropolitan market like in New York or the Hamptons or San Francisco or these Miamis of the world where, this client experience is just absolutely incredible. And that's what the clients expect. And so we kind of said, what could you do with us in Cleveland? And, the guy sold $20 million apartments in New York City. And we started kind of brainstorming and saying, wait, let's actually put our heads together and let's do something out here. And we started Young Luxury. Young Luxury is just a boutique firm that basically focuses on luxury homes in Northeast Ohio, basically homes over $1 million, which compared to New York City, I know that's probably considered adorable. It's a studio. It's first time home buyer studio. But no, I mean, so we've been building and we've been taking just some of the things that he's done in New York and some of the things that he has relationships with brokers on the West Coast and just really changing the game from a luxury standpoint. And the crazy thing about it is I don't think a lot of the luxury clients so far that we've really helped, I don't think they've had the expectations or standards of what we're actually doing. And once they see how we've approached selling their property and the level of attention to detail that we're providing, I think now all of a sudden they're blown away. And I think just naturally in Northeast Ohio, we've kind of set this standard of we do things the way we do things here, and that's just the way it is. And we're really looking to push that and break that, that mode of like, that's acceptable. And so we're really bullish on it. We feel like the luxury market, I know we'll talk a little bit about technology and somewhat of this digital transformation. But we feel like the luxury market is one of the few places, niche markets, whether it's real estate or travel or auto or whatever it is. We feel like that's one of the immune industries to disruption in technology. We think it has a place there, but we don't think that all of a sudden robots are going to be selling, ultra luxury properties. We in our experience, the client still wants an experience and they still want their handheld and they still want to be able to pick up the phone and call someone and have a conversation. And, we acknowledge that and we really provide that type of experience to them.
Over the last decade or so, as you've been kind of entrenched in the space, you mentioned you didn't necessarily always think of yourself as entrepreneurial, but at what point did you begin to think about beyond, kind of the real estate transaction where there is maybe opportunity for you to create a product or facilitate the whole overall experience?
I started to develop an appetite for growth pretty quickly when I got into it. And I think I saw that my growth was limited without the introduction of, product and technology and these tools that can really help you scale quick. Whether it could be not just product and technology, it could be marketing. We started marketing at a much larger frequency on things like television and radio versus marketing to just little target micro markets because frequency hits all, on radio or television hits all over Northeast Ohio, which started expanding our business geographically. So I think as soon as you start to get an appetite for growth is when all of a sudden you need to introduce other tools to help you do so. And I think that was a major eye opener to me joining a real estate team or basically my parents that have been doing things the same way for the past 25 years. And they were great at what they did. They just kind of stayed within their comfort zone. And, I wanted to get uncomfortable.
Yeah, so I think that's probably the best segue to start talking about FlashHouse
Yep.
and the work you're doing there. So maybe you can just walk us through the specific history of FlashHouse, how it was founded, the reason you founded it at the time that you did, and a little bit of the history of what you've done since then.
Yeah. So, really bullish on Flash House and the disruption in real estate that we're seeing. And we actually have this like very unique kind of evolution of how Flash House started to where it is now. And basically, our real estate team, we started to get pretty aggressive with some of our messaging. And one of our messages were, if we can't sell your home, we'll buy it. And, this was probably started this in like 2015. We started marketing it on the radio and on TV. And, that's a pretty compelling message. And it started making the phones ring. We also were doing it in an appreciating market and homes were selling relatively quick. So we actually didn't buy any homes because all of them were selling, right?
Mm.
If we started this in 2009, we probably would have had to buy a lot of homes. But what ended up happening was I got a call from a gentleman and he said, I hear your ads all the time. I'm actually in Alaska, but I stream Cleveland radio. And I hear your ads about if you can't sell my home, you'll buy it. And I'm actually calling about my mom's house. She's out here now in Alaska as well, in assisted living. And I want you to buy her house. And I told him, I said, I appreciate that you reaching out, but we don't buy them unless we can't sell them. And he kept saying, I hear that, but I just want you to buy it. I don't want to deal with it. I don't want to have to fly back to Cleveland. Can you just buy it? And so finally, I explained to him, I'm like, if I buy it, I'm going to buy it below market value and I can help you sell it for more money if we put it on the market. And he's like, I'm not interested in making more money. I'm interested in the convenience of the sale. And so I ended up buying it. And, after I ended up forming a pretty close relationship with him. And I kept trying to talk you out of me buying it because I kept focusing on how much more we could sell it for. And he's like, Ryan, it didn't matter to me. Like that was not what was important. The importance was the convenience. I didn't want to be interrupted. I want to spend, I don't know how much time my mom has. I didn't want to have to fly back to Cleveland to get it ready. And so kind of the light bulb went off of not everyone just values top net dollar. And especially in the world we're in today, when you think of just Uber and Uber Eats and Amazon and everything is convenience, right? And it's a click of a button. And so, the light bulb went off of instead of doing this guaranteed sale program, let's just do an instant offer program where there's a lot of other people like him that want this convenience. And so started doing some research and started all of a sudden learning a little bit more. This is about 3 years ago. Started learning a little bit more about what they call iBuyers. And iBuyers are really popular right now in the Southwest, in the South, in the Mid-Atlantic, in the Northwest. And what iBuyers basically are is just they provide you an instant offer on your home. You go on their website and you fill out some information and they basically buy your home. There's two very large ones, Opendoor and OfferPad, that went public. I mean, these are massive companies. They're both billion-dollar companies backed by billion-dollar companies. And you're starting to see they're picking up a lot of traction, And so I started seeing just what was happening. And I reached out to a friend of mine that I grew up with in Orange and said, hey, take a look at these iBuyers. This is kind of an interesting business model. And, let's talk about it. And so all of a sudden we decided from taking the instant offer, that the young team was offering to actually turning it into a business, to building out the technology and, the platform. We called it FlashHouse with the intentions of basically expanding FlashHouse throughout the Midwest. And being an iBuyer, we put together a team of engineers and our third partner, his name's Tom, is like this product genius and just he really does a good job visualizing from the consumer journey all the way through. And so all of a sudden we put together this really cool platform and we started marketing it. And next thing you know, the phones didn't stop ringing. A bunch of people wanted offers on their properties. And, so that's kind of where we were, I would say, up to about 6 months ago. This is where things got a little bit, we just continue to evolve. What was interesting was as FlashHouse was buying homes, right? So I got a real estate company that's selling homes traditionally, and now I've built what would be considered a disruptor to real estate, which is FlashHouse. And I'm sitting here and I'm seeing the way the young team's conducting their business traditionally, and I'm seeing the way
Mm-hmm.
FlashHouse is disrupting realtors. And I started to realize that maybe the young team would benefit from working with FlashHouse versus competing against them. And so what we ended up doing was the young team started basically offering instant offers to their clients powered by FlashHouse. So the young team would get a call from a seller, they'd go there and they'd say, here's what we could sell your home for. And we work with this company called FlashHouse, and this is what they're willing to buy it for. And the young team's business started to explode because, FlashHouse was going direct to consumer, but the young team already had a large database and already generated a lot of opportunities. And so all of a sudden, the young team became this sales force for FlashHouse. And the real light bulb went off that instead of trying to disrupt the real estate industry, why not empower the realtors with the tools that ultimately they are lacking right now? Realtors do not have the ability to provide their clients this optionality of a traditional sale or a convenience option like an instant offer. And so basically what FlashHouse has evolved to is really the only, we basically empower agents to offer their own iBuying solution. And, our mission is basically to eventually have every realtor be able to offer an instant offer when they go on an appointment. And so, it's evolved so much from where it turned into this guaranteed sale program to now this agent-led iBuying tool. And, it's starting to just take off. It's pretty crazy.
That's an incredible story. I love how kind of the realization of taking these two things and putting them together, and that is really the catalyst for the growth that you're experiencing. I think it would be really interesting and helpful if you can kind of take us through maybe what a generic deal looks like. What are the levers you're considering? How is it that you're actually making money? And maybe going into a little bit of the calculus so that you kind of ensure that you're not getting trapped by overpaying for something. What is kind of the evaluation process here?
Yeah, so we play in the predictability market, right? Like we feel and what's interesting and why you don't see a lot of iBuyers in the Midwest is because it's unpredictable versus if you go to Phoenix or Atlanta or Dallas or, all these other markets that are a little bit newer. Basically, the way it works is the more predictable the property, the more we can pay for it, and the less predictable, we explain to the seller, here's why this is less predictable, whether because comparables don't support it or it's a unique inventory. And so we have to make sure that we build in enough fat essentially to make sure that we can still come out okay. Basically, the way it works is, and the way we're protected is we have a scalable process where if someone wants an offer, they go online, they answer about 25 conditional based questions. When they do, they submit, enter. We receive the offer request. We have algorithms, machine learning based, that sends out an offer. If they accept it, the first thing we do is we actually do a virtual assessment where they walk around the property with their phone or with an iPad, and basically we lay eyes on the property to make sure that it is the way they responded, because the biggest differentiator in value is condition. You can take a house that's in great condition and it's priced way different than, a house in poor condition. And so even if they answer the way they did, we have to validate that the answers are what they said they are. So once we validate or verify that the condition is what they said it is, then we actually move forward with a general home inspection just to make sure there's no defects in the property. If there are defects, we have to make a price adjustment to reflect those. And as long as the house inspects well, or, if we have to make a couple adjustments, we move forward with closing. They can sell their house. We closed houses in a week. We've closed on houses in 90 days. It's really whatever the seller wants. It has to be convenient to the seller. And we kind of feel like, to do a 15-minute virtual walkthrough in an hour inspection and for your house in a 3-minute form online to have your house sold, we feel like it is the most streamlined process and the easiest way to sell a house. The funny thing is, a lot of people that have never sold a house before don't realize how stressful it is, what the process is, all these people coming in and out of your house, the negotiation, deals fall apart. And so, sometimes people don't see the value in it until they actually sell their home traditionally. And then they call us up or send us a message and say, I wish I would have, sold it to FlashHouse. But it's really just a risk tolerance kind of model where we are identifying predictability and making our offers off of it.
Yeah, I wanted to ask about that. You mentioned Uber and kind of the other Amazon, the conveniences of our everyday life, and everything will be sold online, right? If it's not, it
100%.
seems that that's the trajectory. But I wanted to ask about how that translates to real estate, given just kind of it's not something we're doing very often. So
Yeah.
if there's an aversion or some kind of resistance that you've experienced
Yeah.
from folks.
So we are still in the educational phase. All iBuyers are. It doesn't matter how much Open Door is spending, marketing, millions and millions of dollars every month about this new company. It just takes a little bit of time to get traction. I love to joke, as a kid, your parents tell you, don't get in a car with strangers or don't take candy from strangers. And all of a sudden Uber comes out and you're getting in a car with strangers. And now most of the Ubers are like, hey, do you want some mints? And it's like, now I'm
Yeah, here's
taking
some
candy
candy.
from a stranger in a car. Obviously it was a very foreign concept at first, like until your friend did it or you took your first one and you got to where you were going safely. And next thing you know, it's like, how can I live without it? Obviously, this is a bigger decision. It takes a little bit of time to educate the market and get them comfortable. One of the interesting things and one of the reasons why we evolved our model to what we did is where we've had the most success is when the young team brings FlashHouse to the table with their client and there's credibility there and they could say, they've helped a bunch of our clients. When we're going direct to the consumer, all of a sudden we have to win them over by showing them examples of homes similar to theirs that we've already acquired and that other people are doing this. This is not a we buy ugly homes. We're not a wholesale, real estate company, but to tie it back to our new model and what we're so excited about is we earn so much more trust and credibility when we're brought in the door by the realtor that they know and trust. And so I think that educates the consumer much quicker versus us trying to do it all ourselves.
One thing that I wanted to get your perspective on is there's been some, fallout, if you will, in the iBuying space. As I understand it, and correct me if I'm wrong here on the context, but Zillow had this kind of enormous iBuying program and, relying on the company's algorithms where they think were, trying to purchase homes, ultimately ended up paying too much for these homes, laid off, thousands of jobs. And it was, I think, the largest part of their business from a revenue perspective, and that they were writing off billions of dollars of losses on the remaining homes that they have. So I know we've kind of talked a little bit about risk, but like what went wrong and how are you thinking about those kinds of challenges? And maybe it's tied to the idea of predictability that you're talking about, but how do you think about that?
So Zillow's, so here's the interesting thing. One of the benefits of Zillow choosing to close down their offers program was that it created a lot of job opportunities or applicants for us. And so we've talked to several VPs and data scientists and all, we've gotten perspective from a lot of different people. In my opinion, Zillow's case study of an iBuyer is completely in a vacuum compared to everyone else. And here's why. Zillow is not an iBuyer. Zillow is a real estate platform where they, over the past decade, 15 years, have absolutely dominated that space, right? They're a publicly traded company. They drive the majority of their profit, their gross profit, from real estate fees and from Zillow mortgage and stuff like that. Zillow got an appetite to get into the iBuying space. Open Door has been in the iBuying space since 2012. Zillow got in 3.5 years ago. Zillow wanted to be number one in the iBuying space. So all of a sudden, they started telling their team, basically from top down, from my understanding, we're not concerned with profitability. Acquire anything and everything you can, whether it's on market, it's off market, it doesn't matter. Zillow basically had an appetite to be number one and to pass Open Door as the number one iBuyer, and they tried to do it in about a third of the time that Open Door did it. And Open Door has established strong foundational principles in data and pricing algorithms and stuff like that. They've been doing it 3 times as long. In the last quarter, Zillow acquired more homes than the previous 6 quarters combined. And so what really happened was Zillow just said, I don't care, keep buying, don't stop buying. We need to be number one. It doesn't matter how much money we lose. And what I think really happened is you have shareholders that are seeing these massive losses, right? And these properties that are just now sitting there because they just you went out of control with the acquisitions, that you didn't have the infrastructure to be able to facilitate, whether it's the repairs or getting them on the market or the dispositions. The market started to slow down a little bit. It softened up in June, July, more July. And all of a sudden now these numbers are really, really hurting your quarterly earnings reports. And so, what basically I think happened was there was a lot of pressure from shareholders and, investors saying, wait, you guys run a wildly profitable company that you've dominated in a certain space of real estate or a certain sector of real estate for the past decade. What are you doing? And I think they just got so much pressure from how much money they were losing on the iBuyer side that I think ultimately they just said, shut it down. Here's what's interesting though, is I think they made a mistake by shutting it down. The whole real estate game nowadays is all about ancillary revenue, and it's all about vertical integration. And Zillow essentially doesn't close the ecosystem off or the loop off by not offering an iBuyer. An iBuying solution. If you go to Open Door, if you go to OfferPad, they offer lending services, they offer brokerage services, they offer title services. Now, if you really want the instant offer and you're a user on Zillow's platform, which they have hundreds of millions, right? If they want the instant offer, they're leaving their ecosystem and going to Open Door, and Open Door or OfferPad or Redfin Now or whichever iBuyer or FlashHouse. And what's interesting is Open Door is now providing all of those other services that Zillow do. So they're losing that person in their ecosystem. They're going to another competitors, and are they going to actually get that client back? And so I think that although it would have cost them a lot of money, I think that they actually would have, if they were comfortable taking losses for probably the next 6 quarters, which they're large losses, but I actually think they would have actually ended up coming out way ahead if they could just absorb, the expense of doing so for the next year and a half. So it's really interesting. I think that they just got a lot of pressure. People started seeing these numbers. And, it's funny because when you say, it was what's interesting about iBuying is you look at top line revenue, and the acquisition of these assets are so expensive. When people are seeing revenue of billions of dollars, that's just the acquisition and disposition of the homes. The gross profit margin is very thin. So versus you look at like agent services or selling ads to agents where they make the majority of their money, that the profit margin is so large on that the numbers, the data, the numbers are a little bit misconstrued and a lot of times manipulated when people hear top line revenue and how much iBuying generates. It's really just that's the acquisition and disposition of real estate.
So in the iBuying space, like talk me a little bit through competition. So like usually when you find this repeatable structure that can be scaled out to some degree and you're earning a nice rate of return, I would imagine it invites other people to do what you are doing. How much of what you've done is created competition? How much has been already there? And how do you think about that differentiation?
Here's what's funny is it's a hard business to get into. It's capital intensive. It's high risk. It's low margin. It takes time to establish credibility and to educate the consumer. But once you're in and once you are able to raise capital or debt, all of a sudden that opens up a lot of opportunities, right? And so I think you look at Open Door and you look at like Open Door, I keep referencing them because I think they're the kind of pioneer in the space. And it's like they've been in Phoenix. That was their first market they ever went into. 10 years ago, roughly, they only have 7% market share in Phoenix. And they're the biggest, that's their biggest market. That, it's like, it just takes time. You're acquiring three, four, $500,000 assets. It's not as easy as, most, whether it's most investors don't like hardware anymore. Everyone likes software. Just what are you going to do with it? Where are you going to store it? It costs money to produce it, right? Look at the expense of houses, right? And so because it's so capital intensive, it slows down the growth. It slows down the entry point, and it slows down the growth of a bunch of companies either completely dominating it or expanding or getting into it.
And, I think you have kind of a unique perspective on this from both the FlashHouse and the young team, kind of combination. But do you feel there's competition from the old world? How much of it is like from the traditional selling process versus other innovative tech forward companies?
Yeah, I mean, what's interesting, I think it depends who you ask. If you're in the Midwest right now and you ask them about any of these prop tech companies that have raised hundreds of millions, if not billions of dollars to scale quick and to disrupt, they wouldn't think they're a threat at all, right? They just don't know about them. They're not in the Midwest yet. If you were to go to Phoenix or Dallas or Atlanta, and you mentioned any one of these prop tech companies, they are concerned. The traditional realtors are concerned. And I mean, I think that's why we really built what we built and involved FlashHouse. And what we did is we kind of look like we're disrupting the disruptors. We're empowering the agents with all the tools that essentially are going to beat them. And so we think that they still really have a place in the market. What's interesting is, and this is why we're so excited about what we're doing, when you think about just this digital transformation and how it is disrupting the local realtor, I think it kind of forces the consumer to make a decision. Do you want to go with this traditional, local trusted person that you've worked with before and that you have a relationship with? Or do you want to work with this cool company that provides this seamless process and then you can do with a couple clicks of the button? And I think that, unfortunately, it's a bad consumer experience to have to make a decision between one or the other. And that's really why we've, kind of produced or evolved to what we are, is now you can work with your local trusted realtor while getting this digital solution or this, some of this optionality with the instant offer.
One of the kind of tropes of the industry, as I understand it, was always, location, location, location. And I'm kind of convinced often the variables for evaluating a given investment, you can typically boil it down to like 5 things that matter more than anything else. And so I kind of picked up on this questionnaire idea that you have up front in the buying process for people, kind of giving you some insight into what they're offering. But what are, in your mind, kind of those most important things when you're evaluating these opportunities?
Yeah, I mean, I think location is by far number one, and I think it's probably the easiest from a data set standpoint to identify value off of it, because you can just, look at proximity to other comparables and, you can see density of increased price or decreased price. I think, in my opinion, and this is what makes iBuying so tricky and why we've had to invest so much into just our processes and, the way we do everything. I think condition is what really alters value significantly, right? And so just from wearing my realtor hat, not even my FlashHouse hat, when you have a wet basement that spooks a potential buyer, or when you have a house that has all wallpaper or that has, I don't know, like, here's a good example. We were joking about this on a call the other day, internally in FlashHouse. You can paint a house and it doesn't necessarily mean that you're improving it, right? Like you could paint your house red, and that might actually be detrimental to the value because now the buyer is going to want to paint it back to something more neutral. And so when you look at how much condition swings value, I think that's what makes it so tricky. If you're to go on any kind of county auditor or realtor.com or Zillow or whatever it is, and just look at what they predict is the value of the home without knowing the condition, I think that's where they've really gotten in trouble with their kind of predictive AVMs. It's all based on just specifications, location, square footage, bedrooms, bathrooms. It doesn't take into account condition. So we've had to work really hard to focus on what is the condition of the property so that we can offer accordingly. And then also there's a lot of decision whether we improve the condition after we acquire the property, and if so, how far do we go, So I think that's really, whether it's buyers looking to buy, whether it's us looking to acquire, whether it's us thinking about our selling strategy, I think condition is always the biggest driver. And just, how does that affect value?
Building on that a little bit, when you think about kind of the business of FlashHouse, where is kind of the opportunity for growth that you see the most? Is it in geographic expansion, or is it in kind of those ancillary offerings that you've been talking about so far?
Both, by far. You have to do both, right? Because if you don't do both, someone else will. And the ancillary just naturally, the ancillary is foolish not to. You have to. That's really why people get into the business, is the attachment rates when you have the consumer in your ecosystem and you can provide the most value to them in a completely, well-rounded experience from start to finish. The ancillary is such a no-brainer because they have to use a title company when they sell their house or when we acquire it. We have to use a title company when we go to sell it. The majority of buyers have to use a mortgage company when they get it. So it's like, why not use your mortgage? You have a captive audience that's sitting in your house, that's buying the house from you. Why not use your mortgage company? So I think that's where the majority of people get excited, especially in this prop tech space. They're not as concerned about the profitability on whatever their core competency is. They're excited about all the long-term attachment opportunities. From an expansion standpoint, I think you have to show that this model is proven in multiple markets, in diverse markets. I think as soon as you look at some of the iBuyers that have not got to the Midwest, as soon as they start proving their model in the Midwest or in the East Coast, where you have century homes and different styles architecturally and climate and stuff like that, I think as they expand or we expand to markets where there's already iBuyers, I think now you have a true threat to whatever the industry is that you're expanding in. I think that if you can show that your model works in multiple markets, diverse markets, I think all of a sudden now you are taken extremely seriously. And by then it's probably almost too late for any of the competition to even catch up or to create a defense strategy.
What does the future of home buying and selling look like if you can realize the vision that you have for the industry?
There's a digital transformation that has realtors still at the center of it. I think there's a couple industries. I think you'll continue to see digital transformation, and it's just a matter of whose hands it gets into. But I think there's a couple industries, medicine, probably legal, real estate, a few others that are just such large emotional based decisions that I still think that people will be involved in the process for a very long time. I just think it's a matter of, can they provide enough value outside of just being there to provide the emotional support or the guidance or, the local knowledge or whatever it is? Can they provide enough value through technology or through simplicity or, ease? And it's like for them, for the consumer to value them being there for the emotional support. There will be a point if the realtors or whatever industry can't compete at all with whatever the disruptors, whatever the technology that they're using to disrupt this process or this industry is, then I think they'll eventually be out of business. But I think that as long as they still have most of the tools that are being offered by the disruptors, I think they have a place, in the transaction for a very long time.
Mm. So kind of an empowerment of the agents almost.
Totally. That's what our mission is, to empower all realtors with an iBuying solution. And I've seen it, it's so interesting to see it from both sides, to see it from the traditional real estate side and then to see it from this disruption side. And it doesn't have to be, you don't, I constantly think of industries where, they weave kind of in and out of centralization and decentralization. And it's like, it keeps swinging back and forth. And, when Zillow first started, it was all about transparency. Like Zillow said, the real estate industry is screwed because there's no transparency. No one knows what anything's worth. Everyone relies on whether it's the realtor that shows the value, and there's no transparency. Well, what Zillow ended up doing was saying we have the most transparent platform. It's the best place to go to know everything about real estate. So then they started capturing a bunch of users or consumers on their platform, millions and millions, and they said, how do we monetize this? So then what they started doing is basically selling those opportunities when people say, I want to see this property, to an agent who would want to buy it. And now the consumer thinks that they're going to see it with the agent whose listing it is. And a random agent would go, whoever is willing to buy the lead. So what started as a platform about transparency all of a sudden turned into capitalizing through a non-transparent way. And so I think now it's starting to shift back the other way because the consumer gets upset when all of a sudden they're like, who are you? And they're like, oh, we're a realtor. Zillow set us up with you. And they're like, but we didn't realize we were talking to you. And so I think it's just, and now all of a sudden, how are companies looking at that and saying, what's the solution to solve that problem? And it swings back the other way. And so I think you'll just kind of see this natural kind of weaving in and out of the biggest companies getting disrupted. And then all of a sudden the disruptors becoming huge. And then the next company saying, we need to disrupt them. And so for the past decade or so, 15 years, I've been observing it. And it's just like, I think that will always continue to happen.
I want to take a quick detour. You mentioned the kind of the cost of capital in the space is very high. It's not like a traditional software company where, you get the zero marginal cost on everything. So could you tell us a little bit about like financing, equity, debt, how you've gone around, bringing on the capital to build the company?
Me and my partner are extremely fortunate. I mean, it's easy. It's a lot easier to start a company and invest in it when you have income coming from an established other company, right? So both of us have been fortunate enough to do well with other businesses that had allowed us to invest a significant amount of our own money. And then, from a capital side, once you can show, first we financed everything, put together a little bit of friends and family, got a little bit scrappy, put together some lines of credit, established some lines with larger institutions, stuff like that. Once you start to show a proven model and you show consistency and profitability and you show that, you have collateral to back it up and you have essentially an asset backed loan that you're taking out, it becomes a little bit easier. I remember at first, when we first started looking to raise debt, we thought it would be way easier. And we went, kind of banked with banks that we had relationships with. And, my partner kept saying, he was like, this is a no brainer. Like I've had a banking relationship with them forever. And, they pull a hard credit, they do a hard credit pull. And all of a sudden I'm like, they better give us money. I didn't realize they were like pulling our credit. And it's like, he's like, yeah, it's a no brainer. Like we've been banking with them, a healthy account. And they'd be like, unfortunately, you don't have enough of a track record for us to lend you money on this. Right. And it's like, what do you mean? And then we go to the next one and then they'd do a hard pull. And it's like, I got like 4 or 5 hard pulls in like a month on my credit, it's like, it's my baby. And it's like, and then finally we started talking to a little bit more less conventional banks where it gave us a little bit of a safety net. And then of course, then we started to get some traction and then we had, a track record. And then all of a sudden, what's funny is at first you have to, from the debt facilities, family offices, we're on their terms, right? And you got to do what you have to do. Luckily, we turned property so quick that it's the cost of capital is not crazy. But it's funny, once you start, you have multiple debt facilities that want to give us money, then all of a sudden how the leverage swings back the other way where, all of a sudden, money's so cheap right now where they all want us to use their money. And so, now we're at a place, now we're in a really fortunate position where we we have access to more debt than really we need right now, but it's great to have because you just it's it's your blood supply, right? Like if
Right,
you run
right.
out of money, you're completely hamstrung. You can't acquire properties, and that's one of the reasons why I think, like I said, when you talk about expansion and stuff like that, it's hard to do unless you have these massive warehouse lines, and that's when you're bringing in big venture capital and like open door $1 billion SoftBank backing, like it starts to get very, very big and very macro quickly.
Yeah. Maybe before we kind of bookend it with some reflections on your entrepreneurial journey and maybe even some Cleveland real estate. Where is FlashHouse today? And that story you kind of told in the beginning, what have been some of those like personal outcomes that you've seen and some of the human element to this?
Yeah, I mean, Flash House today is in a really exciting place. We are in that place where things are about to get real wild, and for the past 3 years, you talk about like kind of the human elements, the emotional elements to this. For the past 3 years, I've invested a lot of money into this. I believe in the theory of it and the thesis of it, and I've invested all of my time into it, while also building another company. We're finally at that place where you're going to see like massive growth, large kind of PR opportunities for us with just some of the things that we have going on. And it's exciting, and it's been a grind. And the funny thing about it is that selling real estate and growing this big real estate team has been fun. I'd probably say it's the most rewarding that I've had a lot of team members that I've helped grow and groom, and they've seen so much success as realtors, and they've been with me for a long time, and they all these great careers now, and that's been really fun, and it's been fun to help all of our clients. Sold thousands of homes. Flash House is something. It's something. It's almost hard to explain, but it's so much bigger. It's a challenging problem. It's a problem that's new, right? It's not as easy as just there's there's millions of realtors selling real estate. There's only a few people that are really playing in this iBuying space. And I can understand why now 3 years later, because every time we thought we had it figured out, we, got slapped in the face because we realized that we were so wrong and like that idea was never going to work. Right. And we're finally at a place now where it's becoming very exciting. And, there's been times where I think especially with a startup, there's times where you only feel the pain. It's like, is this ever going to be anything? Am I ever going to make money? Am I ever going to stop losing money? And I think it's just really exciting that we're at a place now where it's like, I don't want to say we've made it because we're far from that, but we're at a place where we're starting to acknowledge that we have something huge in front of us. And we have a massive opportunity, and that it's hard not to get really excited about it.
Yeah, it's a commendable place to be. It's very cool. It's a tough journey.
It's a tough journey, and a lot of people. What I think is amazing about the journey is a lot of people never get there to just where we are right now, and we're looking to go to where very few people have ever been, right? And we understand what's ahead and the work and the commitment and the dedication, and I wouldn't have it any other way. It's become, it's an addiction, it's passion, it's what fuels me, and it's really exciting. And, I'm excited for you to see where we're at in a year or two from now. And it's like, it's going to be wild.
Yeah. You mentioned getting slapped in the face a few times. What are some of the lessons that you've learned along the way here?
Yeah, I mean, I think it's we all of a sudden have a massive month, right? And it's like from an acquisition, from a disposition, from an inbound opportunity, whatever it may be. And we're like, here we go. This is what we've been waiting for. And then the next month, literally the phones don't ring once. And it's like, I'm so confused. I thought we finally made it, or you have a team member that you bring someone on that you think super talented, and maybe they just were the right person in the wrong place, or and you think this person's going to change the trajectory of the organization, right? And then they don't. And that's a part of it, right? Like there's all these things in business that it's just, I think, are very easy to get excited about before you have a large enough sample size or a proven model. And I think one of the things that it's not that I've become numb, but I think I've just learned that it's like we haven't been doing this a long time. We've really started, I would say in the past maybe year and a half is when we really started to identify what the vision was and started building towards it. And so I think I've just become a little bit more seasoned and wise in my short year and a half of every day is going to be a new journey. And, the day before is gone. And can I improve just a little bit the next day? And, so those are the type of things that I think a year and a half ago, I probably one day was on cloud nine and the next day I was 6 feet below. And, I was on this emotional roller coaster. And now I think it's like, I understand the vision. I understand the mission. I understand our strategy. I see 3 years out what this business looks like. There's a plan to get there. And it's just, from an operator standpoint, like it's just, we're just in such a different place, and a lot of that helps that we're getting such great guidance from, people that you've talked to and that are really influential and have been, it's amazing how founders like to pour into other founders and just the wisdom that I've seeked, and I absorb it all. And hopefully I hope one day I'm in a place. I think the end game, nothing more would make me exciting than for people to seek, my guidance and my wisdom. And I would love to give it to people, because I think, that's been one of the biggest eye openers is how many people have shared with me and helped me get to where we are,
Yeah, no, absolutely. Everything you're saying resonates a lot. I've come to think of startup years as like dog years in terms of experience. You just like accumulate 7 years of learning
for sure.
in this very compact timeline, rolling with the punches of trying to build a company.
Yeah, but that's why we play the game though. And either if you don't have the stomach for it, the appetite for it, it's not the right, you'll be in and out in a heartbeat. And I've learned to take a lot of criticism and evolve from it and improve from it. And I've learned to take advice and guidance and just implement it. And I think there can be no ego, if there is, I don't think you stand a chance.
Yeah. One of the things before we kind of close out here was what you have felt has been maybe the most transferable from your time as a chef into this world you find yourself in now.
Yeah. I mean, the funny thing about it is when I was 18, all my friends were going to Ohio State and Indiana and Wisconsin and all these, they were partying, and I went to culinary school, and, we had 6:30 a.m. clean shaven, your chef jacket had to be pressed. And it taught me such a unique skill set of discipline and preparation and all these other things that it's like, it's amazing to look back at all of that and say, how much impact did that have in who I am today? And what would my life be like if I never did that, And, some of the chefs that I worked for, just unbelievable minds and creativity and how they approach things. And although, the culinary world is not this like high margin, massive growth kind of world, the people that are in it because they're passionate about it. And, you take some of that passion combined with the creativity and the work ethic, and you apply it to large addressable markets. And it's like, it's wild just to think about the opportunities that are out there.
Yeah. So we'll tie it out here in Cleveland. It's interesting, your perspective from the young luxury experience. Like maybe the pandemic has, anecdotally for me at least, seemed that it has had this impact on people moving to Cleveland, and kind of this, not just Cleveland, but this influx out of kind of the more dense populous cities around the country to cities like Cleveland. But I'd love to just get your perspective having both built FlashHouse and as a realtor just on Cleveland real estate and how you're thinking about it and what that looks like.
Yeah. So what's interesting about Cleveland real estate is it's it's kind of a hidden gem. The value is unbelievable. Over the past probably 3, 4, 5 years, there's been a lot of institutional money flocking to Cleveland, acquiring as much as they can because of just where the price points are and where, money is so cheap. But I think, Cleveland it's a special place. When I was 18, I said, I'm never coming back. And I went to culinary school in New York, and I moved to Chicago, and I lived in Vegas, and and all of a sudden I'm 38 years old. I live on the east side of Cleveland and got 2 kids and a wife and 2 dogs. And it's like, on some acreage, and it's like, I couldn't imagine living anywhere else. And, it's such a special place, and it's so easy. Life is just so easy here. I am the biggest cheerleader for Northeast Ohio, not just because we sell it, but because I've seen so many people move here from these big cities and from these big markets where everything is such a rat race, and you struggle to say you live in New York or in LA or in San Fran or whatever it is. And they get here and their eyes just light up on the beauty and the simplicity and the elegance and and it's just all these things that it is very rare. I feel like that we get people that move here that are like, I just can't wait to get out of here. And it's really cool, and we hear it from them. And, it's, the people that do leave here, sometimes you get transplants that come in and get out. They're like, I'm so sad to leave. Like, it's a great place to call home.
It is. The closing question that I have for everyone is for their favorite hidden gem in Cleveland. And no one's ever said Cleveland real estate before.
Yeah. Cleveland real estate is a hidden gem. It is. I mean, if you think about it, just the metro parks are obviously such, and I don't know if they're really hidden, but I would say the metro parks and really University Circle. I think that, kind of that cultural arts district, if you weren't from here and all of a sudden you just got dropped off there, right? Like just dropped off right in the middle by the art museum and, Wade Oval and everything that's there. I think it's so architecturally stunning. I think that it's just special. I wish, one of my biggest gripes with Cleveland is I wish that it was just a little bit more accessible, and there was a little bit more connectivity from, that to the lake, to downtown, to the west side, to the heights. And it's like, I don't think people, myself included, take advantage of all of the amenities or the hidden gems as much as we should, just because of accessibility, and that's, I wish I was in urban planning about 100 years ago or something. And I definitely would have not solved the problem, but I like to think I would have. And it's one of those things that it's such a special area. I maybe get down there once a month, to go to dinner or to kind of walk around. And it's like, every time I'm there, it's like, I should be here every week,
Yeah, no, I feel the same way. Well, Ryan, thank you so much for coming on and for sharing your story. And I mean, it's pretty incredible how FlashHouse has developed in the last few years. So really, really appreciate it.
Yeah, this was a treat. And like I said, I love what you're doing for the city. And it's amazing to see so many founders and talented people that are, being cultivated here. And I love that you're putting a spotlight on it. So really appreciate you, taking the time and having me on.
Absolutely. If folks have anything they would like to follow up with you about, where is the best place for them to reach you, Ryan?
I think just on LinkedIn is normally the best, or Ryan at flashhouse.com. Feel free to shoot me an email. Would love to connect.
Awesome. Well, thank you, Ryan.
Love it. Thank you.
That's all for this week. Thank you for listening. We'd love to hear your thoughts on today's show. So if you have any feedback, please send over an email to jeffrey@layoftheland.fm or find us on Twitter @podlayoftheland or @sternhefe, JEFE. If you or someone you know would make a good guest for our show, please reach out as well and let us know. And if you enjoy the podcast, please subscribe and leave a review on iTunes or on your preferred podcast player. Your support goes a long way to help us spread the word and continue to bring the Cleveland founders and builders we love having on the show. We'll be back here next week at the same time to map more of the land. The Lay of the Land podcast was developed in collaboration with the Up Company LLC. At the time of this recording, unless otherwise indicated, we do not own equity or other financial interests in the company which appear on this show. All opinions expressed by podcast participants are solely their own and do not reflect the opinions of any entity which employs us. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Thank you for listening, and we'll talk to you next week.